please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, then first up, let's take a quick check on the Asian markets. They've opened up mostly in the green early this morning. Remember, the S&P 500 and Nasdaq, they closed at record levels on Friday, following commentary coming in from the US Fed Reserve Chairman Jerome Powell on the back of the positive cues that we're seeing from the US markets. Asia's taking a bit of a cue as well. Nikkei is up close to around 0.7%, holding with a gain of more than 150 points. The dollar yen as well is holding above that 111 odd mark. So good news for an export-oriented economy when you see the dollar yen move from around 110 to around 111. The Kospi, well, it's holding on to some mild gains, so that's good news, 0.2% higher. But let's pull up the other couple of markets as well. The SGX Nifty, the last time I checked, was suggesting that in line with these Asian markets, the SGX Nifty as well as saying we're going to open up with a gain of around 35 to around 40 points out.
Okay, central bankers and finance ministers from around the world have gathered at Jackson Hole, Wyoming in the United States for the annual Economic Policy Symposium. Now, speaking at the gathering, in his first address at the summit, Fed Chairman Jerome Powell said he expects to see further interest rate increases ahead. Now, according to him, the economy is strong and can handle more normalization of policy. Remember, so far this year, the US Federal Reserve has hiked rates 2 times already, and members of the Federal Open Markets Committee have indicated that 2 more rate hikes might be coming. Well, on Wall Street, the US stocks rose in overnight session with the S&P 500 and the Nasdaq closing at record highs after Federal Reserve Chairman Jerome Powell affirmed the central bank's strategy of gradually normalizing monetary policy. Now, the S&P 500 rose over 0.5%, led by gains in materials as well as tech stocks, while the Nasdaq advanced almost 1% as well. Dow, for example, jumped around 133 points at close. And in terms of the data, well, the weekly jobless claims fell to around 210,000, near levels not seen since 1969. And even if you look at the core durable goods data, those orders rose by around 1.4% in July, telling you that the economy is on the right track.
All right, then on that note, let's get in some opinion from Barclays on the impact of the trade war on the US markets as well as earnings.
The first order impact of what is happening if you just have a trade war with China, the first order impact on US earnings is not going to be very substantial. So we have sort of pretty detailed estimate of that, and we estimate that even if you get 25% tariff on all US imports and exports to China, the overall impact on 2018 earnings is going to be around 3%. Now, this does not account for the impact of sentiment. That's sort of quite unquantifiable. But the first order impact, I think, is very limited. And I think the market has, although it was quite nervous when this whole thing started back in March, it has come to realize that the strength in the broad US economy is able to absorb that. Sectors that we are overweight, we are still overweight sort of a mix of cyclical and defensive sectors. So we are long infotech. At the same time, we are long financials, but we are also long healthcare. We think consumer discretionary should underperform and utility should underperform. And so the rest of the sectors, we are sort of market weight. I guess the key question is, of course, that what is happening in the infotech sector over the last quarter, is that calling for a top or not? We really think the momentum is still there. We are not still, the bull run in infotech is not over yet.
Well, leverage asset prices and rising rates is not a great combination, says Raghuram Rajan. Now, speaking to CNBC's Steve Leisman from the sidelines of the Jackson Hole Summit, he talks about the Fed's rate trajectory and what he makes of the growth in the emerging markets. Here's a slice of that very interesting conversation.
He did mention that the Fed was on the lookout for that. I do worry that in this period of accommodation, we've had an increase in leverage, not in the same places as before, in new places. Of course, the emerging markets, but also the corporate sector in the United States. And leverage plus asset prices plus rising interest rates, that's not a great combination.
Given all of that, would you be steering the Fed the way Chairman Powell is steering it with gradual rate hikes, or do you think there's a need to remove accommodation and liquidity faster?
No, I think, as he said, you're sort of steering between two pitfalls. One is going too fast and tanking the economy, and the other is going too slow and raising questions about whether you were at the right pace and then suddenly people think you're going to go faster, which is equally problematic. I think they're doing a reasonable job of advertising what they're going to do, but also doing it and not backing off as a result of market volatility and so on. I think if it gets big, and I think he hinted at that, they may reconsider, but at this point, they're moving at this pace.
One of the fallouts from higher interest rates has been some disruption, maybe that's too kind a term, but trouble in some emerging markets. Turkey is one particular example that's been out there. Is that a unique case, or is that the sign of things to come in some of these emerging market countries as a result of an appreciating dollar and a higher Fed funds rate?
Well, I don't think it's unique, but I do think it's an outlier that Turkey has had some pretty significant buildup in corporate debt, especially foreign exchange denominated. And Turkey has also had some bad policies, including the idea that inflation is controlled by keeping interest rates low rather than raising them. And I think as a result, that has upset markets, and Turkey has suffered some of those consequences. Of course, Argentina was before Turkey. Argentina did many of the right things, but did them a little slowly, and the markets again lost patience. I think there are other countries which have problems of large current account deficits, large fiscal deficits, and possibly political change. And they will have to react when the time comes in a way to reassure markets. But in some sense, I think we hope that these two countries are outliers, not an
How about
indication.
India? Is India something that creates concern for you?
No, I
this
think,
context?
I think broadly India has had reasonable macro policy over the last few years. I think there have been some aberrations like the demonetization, which slowed growth considerably. Growth is picking up right now. And, India has reserves, 400 billion plus. So it's in a much better position than it was in 2013.
Well, that's good news then, if the reading is that, in fact, India is in much better position than 2013. And growth is picking up as well. But let's tell you how the European markets closed in Friday's trading session. Most of them, they closed higher. Remember, conclusion of US-China trade talks. That was one factor that played out, as well as the second factor was a key speech by Fed Reserve Chair Jerome Powell at Jackson Hole. In reaction to that, we had all the three frontliners ending with some gains in Friday's trading session. The CAC was up close to around 0.2%. The DAX as well managed to eke in some gains. But it wasn't just the frontliners. The Irish and the Italian index, both of them ended with good gains of around 0.5% to around 1% odd. And also, if you took a look at the emerging markets, well, there was green on the screen. So the Brazilian index ended with a gain of close to around 1%, but the Russian index was up nearly around 2% in Friday's trading session.
Okay, let's shift focus to the world of currency then. The dollar index under pressure after falling to session lows on Friday after Federal Reserve Chair Jerome Powell said steady rate hikes are the best way to protect US economic recovery, but also suggested that the Fed funds rate was getting closer to neutral.
We definitely see some scope of a tactical retracement in the dollar. That might be very temporary, but we do see scope of that happening over the next few weeks. What we have seen for most part of this year, the dollar was supported by two things. First, US economic outperformance, and second, broad risk aversion. And now with Powell sort of suggesting that he is keeping his policy options open, not really committing to a very hawkish trajectory, and probably markets' worst fears that he was going to be more hawkish did not come true. That does provide a catalyst. So we do see scope for some retracement in the dollar here. We are basically looking at anything between, say, 3 to 4% over the next few weeks. And again, this is not broad-based dollar weakness. We are still being very selective in where we want to position in terms of expressing that weaker dollar view. In EM, that would mean currencies like Thai baht, Korean won, Indonesian rupiah. That's where we see some of that dollar weakness coming through. In GDN, probably it's going to be a lot more mixed. It's not a very clear picture, but probably Aussie is one currency where we think that there could be some more gains over the next few weeks.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Well, back home on the Lal Street, the markets ended lower on Friday, with the Sensex and the Nifty ending a 4-day gaining streak. Now, the Nifty gave up the 11,600 mark to end around 25 points lower. The Sensex too ended below the 38,300 mark, giving up the nearly 85 points at close. Mid-caps fell in line with the benchmark indices, with the mid-cap index down about 0.2%. The Nifty Bank also underperformed because that index lost around 193 points at the time of the close. But how the Qs stacked up for today? Naturally, we're telling us that the global Qs look positive. Asia also is trading positive. So what's your sense? How does the day look like?
Well, that's good news, right? When the US markets ended record highs, that's fantastic news, in fact. But the commentary that came in from there suggested that rate hikes, yes, they're going to come in the cards. So I'll be looking out actually for the Indian rupee, because yes, we'll see a bit of a rally in most of those Asian markets. But if there's strength in the dollar, then you'll have to keep an eye out on the Indian rupee. But as you said, in Friday's trading session, the Nifty was down close to around 25 points odd. Both the two frontliners, that's the backbone of the index, the pillars, if you'd like to call it, the Nifty Bank as well as the Nifty IT index, both of them were under pressure. And that's what led to the Nifty breaking that 4-session winning streak that we were enjoying. So all of last week, we were slowly climbing higher. In Friday's trading session, well, we gave back close to around 25 points. The good news is the SGX Nifty suggesting we're going to make all of that up in the first tick itself. Last week, remember, the Nifty ended with some gains, but it was because of a couple of those frontliners. L&T and Reliance Industries, they're large weights on the index. They rallied 6 to 8%, and that's what offset any kind of losses we saw on the likes of Titan, Yes Bank. There were some stocks that were under some pressure. Even big boys, Infosys and ICICI Bank, both of them did see some selling. So the innings that L&T and Reliance Industries played was good enough to take care of all that selling that we saw. Friday's trading session, institutional action, well, that was skewed because of the Hexaway large trade that we saw. More than 1,000 crores in terms of, a change of hands out there. So that's why you don't have to read too much into the FI data. But otherwise, we're getting to an expiry week. The FIs, yes, they're net long on the index. They're, not that much net long as they were at the start of the series. But still, 51% of their positions are on the long side. In terms of index options, well, in Friday's trading session, they bought, they bought more puts than calls most of this week. And also the good part is that when they are, long on the index and when they've written 2 puts for every 1 call, telling you that downside seems to be limited at these levels. The PCR, every time it goes to 1.75, we see a bit of a correction. That's what happened in Friday's trading session. So the bears will look to defend the 11,600 mark. They'll be saying, let the bulls fight in for that particular mark. If we're looking at resistance levels, the all-time high for the Nifty now is at around the 11,621 mark. So keep an eye out on that level. While in fact, the range should be roughly around 11,620 to around 11,650 odd. But we're going to be focusing on banks as well as power companies in today's trading session. One is because the RBI deadline ends today. That's because the February 12th circular, that really, date comes to an end today. So anyone that has more than 2,000 crores of stress loans, they got 6 months extension. That comes to an end. Second factor is Allahabad High Court. That could come out with a judgment as well. But director pulled up very, very rightly the Brent crude prices. That's moved back towards $76 per barrel. And that's a bit of a worry because just, around 10 sessions ago, we went down to $71 per barrel. So we're $5 higher. Not great news. Keep an eye out on the rupee as well.
Oh, well, yes. So Brent quickly caught up around 4 to 5% the last week itself. But you did mention about the banking and the power stocks which will be in focus. Any more stocks?
Yeah, we'll keep an eye out on those sectors for sure, Anisha. Banks and power sector. But we'll have to keep an eye out on a few more stocks. Stocks in news, basically, you're looking at a couple of stocks that come into the F&O ban at the start of an expiry week. So things will get very, very volatile through this week. Hexaway and Jet Airways, both of them come into the F&O ban. So keep an eye out on them. Jet Airways also will be looking out because Q1 numbers will be coming out today. They'll also be discussing cost reduction initiatives, turnaround plan. The market will be waiting for commentary out there. Stock is already down more than 60% in 2018. So keep an eye out on that stock. Couple of other smaller stocks, Philatex, they'll be raising some money, 150 crores odd. And JK Paper had a dream run in the last 20 days or so, or last month. The stock has given more than 50% returns. Now, in fact, some production has been disrupted and there's some production loss. So we'll have to keep an eye out on that one as well.
Okay, Nigel, thank you so much for that. So you mentioned Jet Airways and we're not done discussing that yet because remember the board will meet today the Q1 earnings as well as the turnaround plan for the company. We'll discuss more on that after this very short break. Stay tuned for that.
Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, it's been a year since the Supreme Court's landmark judgment upholding privacy as a fundamental right. But privacy is still a work in progress, says the CEO of the Unique Identification Authority, who also added that the government remains keen on a data protection law. Now, speaking exclusively to CNBC-TV18's Ashmit Kumar, he also argued for data localization, claiming it will spur innovation as well as growth. And finally, UIDAI CEO also made a plea to all the users not to share their Aadhaar numbers on social media.
We issued an advisory saying that the people should not put their personal information, such as Aadhaar, unnecessarily on a social media or social domain. And I'll give you an example. You use your debit card, credit card, PAN card everywhere, right? And you share with wherever you want to do share. But do you ever put your debit card number, credit card number, or PAN number, or your passport number on a social media, or Twitter or Facebook? So we have issued a detailed FAQ just few days back, and we have said that in case of an Aadhaar, Aadhaar has to be used very freely. You can give your Aadhaar card to everyone, and you can rest assured that nobody will be able to misuse your Aadhaar number, even if you know your Aadhaar number, because Aadhaar number, if it is to be used for proving your identity, your fingerprint is required. Now, as we discussed just now, your face also will be required after some time, right? So your usage of Aadhaar number is not possible unless until it is accompanied by a fingerprint or OTP and face and iris and so and so. However, so far as the putting the Aadhaar number on the social media and other things are concerned, these are completely unnecessary.
Okay, moving on, Aviation Minister Suresh Prabhu has directed DGCA to submit a report on why as many as 9 A320neos have been grounded. Now, Prabhu has stressed that the safety of the passengers is paramount and it cannot be compromised at any cost. Utkarsh Chaturvedi is joining us with more details on that. Utkarsh, morning, over to you.
So Suresh Prabhu has asked a detailed report on the grounding of the A320neo engines. Now Suresh Prabhu, through the report, has asked the aviation regulator if there are any safety concerns in the current engines. Now, given that the detailed report will take time, DGCA has sent the interim findings to the Ministry of Aviation. Now DGCA says that currently there are 60 A320neos which are flying in the Indian skies, and out of them 9 are currently grounded, 7 by Indigo and 2 by Go Air. Now there are two kinds of A320neos, one with Type B engines and the other with the Type C engines. The ones which are with the Type C engines do not have any technical snag, are fit to fly, but DGCA has assured the ministry that there is no safety concern at this point of time, as routine checkups are done to check if there are any technical issues in the aircraft. Now, it was in March when DGCA has ordered 11 aircrafts to be grounded, 8 from Indigo and 3 from Go Air, because they had developed technical glitches and were declared unfit to fly. Since then, Indigo and Go Air have been able to decrease the number of aircrafts grounded to 1 each by Thursday. Now, even though the initial findings which DGCA has denied any safety concerns at this point of time, but a detailed report can have details which can be further detrimental to both Go Air and Indigo. Now, Indigo in a statement has said that the Pratt & Whitney has initiated the delivery of new engines and the changes are pre-planned according to the laid down norms.
Okay, sticking with the aviation sector then, Jet Airways will be in focus today as the company is set to report earnings later today. The board meets today, and what's on the agenda? Sonia is here to tell us the details. Sonia, good morning. The stock has underperformed quite a bit this year. Today, is there any hope from the numbers that the investors could hope for?
Yeah. Well, finally we'll get to hear what the Q1 numbers are from Jet Airways. Remember, the 7th of August, the company had deferred announcement of the Q1 numbers, stating that the auditors refused to sign on those numbers. The reasons were not said, so perhaps later today we'll get to know that. Also, the company has said that they'll come out with a cost reduction plan, so that's imperative for the earnings to pick up. This quarter, however, is expected to be a washout. The stock is down about 66% in 2018 alone. Last quarter as well, there was a loss. Some estimates forecast a loss this time around too. Edelweiss is expecting a loss of 416 odd crores versus a profit of 110 crores same time last year and versus a loss of more than 1,000 crores last quarter. Yields will continue to be under pressure because of competition. Most of the operational parameters will be on the weaker side. So the revenue per seat kilometer has been declining while the cost per seat kilometer has been going up. In Q4 itself, if you look at it, the revenue per seat kilometer was down about 2% year on year. And the graph will come up for you. You'll see the way the revenues have been declining. On the cost side, of course, fuel has been going up for everyone, but the cost per seat kilometer for Jet Airways has been the highest compared to its peers. So even in the quarter gone by, the CASK rose about 4% year on year at 4.63 rupees per seat kilometer. That's the highest in the industry. The passenger growth was just about okay, in line with what the quarter saw for the industry. About a 10 to 12% growth is what Jet Airways has done. The PLFs are expected to reduce to about 82 odd %. But the bigger issue for Jet Airways, as we know, is the mounting trade payables, inability to pay their suppliers, and the mounting debt as well. Now, the trade payables for Jet Airways have almost quadrupled in the last 7 years, and we've seen the debt as well in the quarter gone by go up about 220 odd crores quarter on quarter, now standing at 8,150 odd crores. So overall, we are expecting some, cost reduction efforts, etc. But the need of the hour is a stake sale. There are reports that Naresh Goyal may offset some of his stake. Let's see if any of that takes place today.
Okay, all right, Sonia, we'll keep an eye out on Jet Airways then in today's trading session. Well, time for a quick break. Up next, RBI's February circular deadline to resolve stress loans of over 2,000 crores ends today. A 360-degree coverage on this important event when we return.